Hey everyone, hope you're doing super well today. So I'm going to do my best to quickly and promptly get us all out to the charts. Please make sure, I know the disclaimer's been up there the whole time, but just read through it in and of its entirety, of course. This being for educational purposes only, folks. So we're going to get right out to it, and without further ado, I am going to do that as we speak. So 1 second, please. And I think, yes. All right, there we go. You should have the charts up. I'm just going to close out my other items on the other screens here. Give me just 1 second to kind of move stuff around as we're joining the session, as you know. Okay. So let me just tell you what's happening right now really quick, just in case, because it's kind of great timing. We're getting right into the room. You can see there I have a down bar entry. So right here, let me open this up. We'll talk about the other order in a moment. So this entry right here, as you can see, it's canceled now, but I'm going to go in there and submit that. That's a short entry on the micro E-mini 4127, but down to 4124. So in other words, it's going to execute the order on the close of the down bar. What I'm going to do is bring in my bracket order using the order management here, right? So I'm going to bring that down, and what you're going to see here is constant fluctuation. And what's happening is the entry here, again, this green label, the one my mouse is hovering around, that is moving with the close of the current bar, right? So if we open that up a little bit, we kind of focus on that area right there, we can see that every time that close moves up and or down, as does the order entry, okay? So the other ones, not anything out of the ordinary here, but essentially we have our stop above. So you can see there that the stop is not moving. So the stop is, at this point, fixed. I can move it. Of course, you just saw me do that. But I don't want the stop to be moving, right, as do I want the entry. If I didn't want either of them to be fluctuating as such, as you know, I could go up here and instead of opting for the down bar entry, now, mind you, I'm going to show it to you in the secondary menu because currently we've hidden everything that is not applicable. By that I mean when we have a submitted pending order, there's no reason currently for us to see anything other than the order type in and of itself, right? But this is what it is, as you all know, right? And except for those who are new, of course. So I'm kind of talking to everyone today, so just bear with me if I'm. We do have new people in the room and things to that extent. So I'm going to be talking as if this is new to everyone. In fact, obviously it's not, but I am going to speak that way, right? So just kind of bear with me throughout this. But in the secondary menu, you can notice all the options. And again, that was here until it wasn't, right? Until I went over and opted to submit this order. There comes my label down at the bottom notifying me that the orders will be submitted on the close of the down bar, okay? So I also have this indicator here, which is basically specifying where the bar is going to close, okay, on the following, you can look at this two different ways. Where is the bar going to close, the corresponding bar, and or where is the next bar going to open? So these Renko bars allow us to predetermine where that's going to be. If we were to put this, of course, on a minute bar or something like that, it would not function as of course you can't, I wish we could, but we can't predict where minute and or time or tick bars, etc. We can't predict where those are going to open or close. Again, Renko bars you can. It's very nice. So anyway, that's already letting me know, hey, at 4124 we're going to get a new bar, right? Great. So that's what this is doing. And in my settings, I've specified that I want a trigger line to be default, or rather the default value of the trigger line to be equivalent of a 1-to-1, right? So if I look at this, what I can see right over here is the risk reward, right? So RR, acronym risk reward. 42, you can see the trigger line is set also. 42 goes down to 41, it's 41. And so those are going to be the same because in my settings I've specified I want the trigger line to be a 1-to-1. This is going to be twice because I've specified I want that as a target to be a 2-to-1. Okay? So we have the entry. It's going to fluctuate until we hit 41.24. At said point, everything will become fixed. And even as of right now, if I wanted to say, you know what, I'm going to use price action, and no matter where this bar closes, I want my I would like for my trigger line to be, wherever it is, right? So let's say, for example, maybe I want my trigger line to be equivalent of this particular low, right? The structure low there. So what I could do right now is I could drag the trigger line to whatever point I desire. So let's go ahead and do that. Let's just move it, right? So what we just saw is, hold on one second. Yeah, I can't deal with that right now, but okay. Yeah, no worries. So what you just saw is the line and or the labels, right? So what you saw is them go from being solid to dashed. And that you can also see that they're no longer moving, right? Now the value of the risk or reward currency is changing. However, the label in and of itself is not moving. So we just got the fill on the close of the down bar, and again, as I told you, could have perhaps waited and let the order get filled and then done that, or we can go ahead and just predetermine it and prepare, if you will, for the trade, right? So I can move this anywhere I want it to be. If I want it to be on this low, that's a determination that I need to make, right? We'll look at that momentarily. So we can leave that there for all intents and purposes. If I wanted to do, say, a 1-to-1, that would be relatively easy. I could look here and say, well, I have 48 ticks at risk, right? So let's go to 48. Okay, so now I know that I have, excuse me, that I'm looking for exactly a 1-to-1. Excuse me. All right, and so on and so forth. So we'll do a little bit of analysis, but one second, please. Sorry, folks, I had to get a drink of water there. That was, yeah, interesting. Okay, so I just wanted you to see how that was working because it was kind of happening, abruptly there. So I'm going to fix the chart, and then we'll go look at a couple of other things while that is occurring, okay? So I just want to bring something to you guys' attention. Remember yesterday in the live room we were talking about being the buyer below, right? So there's a few things that we've talked about over the past 2 weeks, and if you were to, I think you probably should have gotten an email yesterday. There was just like it's kind of a cool little thing, but essentially we consolidated 2 weeks worth of the trades that I previously discussed, the swing trades and so on, which included this level here as well as this one's what you're seeing right now. Point is, if you check your email, maybe look in the spam or whatnot, and you'll see an email with like a little video icon thing in there, and you can click on that. It takes you like a YouTube short thing. It's just basically, again, a consolidated, I think it's maybe 40-second video. It's really fast. But it does show those. So there's only, I think, 3, memory serves me correctly, there's only 3 trades total over the course of 2 weeks, right? So that doesn't sound good. You're like, oh, well, that's no one wants to hear that. I get it. But the reality is one trade alone, the potential reward or otherwise is could supersede 20 day trades, right? And so, as you know, my personality speaks to me in certain ways, as does yours, I'm sure. So the preference there is quite simple, easy for us to make that determination, right? What is PFA Shorts? Well, it's not PFA Shorts. It's YouTube Shorts. Yeah. So what that is it's just a little clip of a video, basically. But if you think let me tell you first and foremost, I am not a social media person. Like I just don't understand. There's so much that it's all over the place these days, and I don't have time to keep up with all of that stuff. Suffice to say, we've been doing YouTube videos, I don't know, for 12, 13 years, something like that, a long time. So I felt, it's a pretty cool thing. but it does take really short clips. I think, you know, if you can look on there, and we have we posted probably 4 or 5 or something like that, but that was just the latest one. Yeah, so just a quick clip. I think they probably did it in competition, of course, with Instagram and the TikToks and the, you know, all of that stuff. Again, I don't know anything about that. We don't even have Instagram or TikTok or whatever, but I do know what they are. Obviously, I'm not oblivious to the social media world. I just don't desire to get involved in it. So anyway, yeah, thanks. I'm glad I got a laugh out of you, though. Yeah. All right, very cool. Yeah, you can just click on it and you'll see it's a quick moving thing. So what it's going to do, though, is it'll cover our latest trades, right? So we had, again, over the last 2 weeks, only 3, but if you remember, they're very big ones, right? So we had one here. I kind of wanted to cry out loud a little bit. I'm joking, of course, but, you know, it's better laugh than cry, right? So if you recall, in the room on that day, had a long entry, bought the market right into this historical, there was a demand zone, it got broken, so it's no longer there, right? But we bought there, and then I was looking for 73. I think it hit, what, 72 or something like that? No, that's not what I'm looking for. Let's see what the high there is 41.70 quarter. Okay, so 41.70 quarter. It came within 2 3/4 points of that 73 entry. So, I was a difficult one. That was, I mean, you know, had it have done that, right, and all that. But that's okay because it was protected and whatnot, and then went down and kind of took that out at break even. And then we were looking for this lower level, which we had talked about the week before, around the 40.76. So this area here, and we were looking for that 73 again, as we discussed. So unfortunately, we didn't make it on that time, but with this one, we did, right? So we made it up to 40.73, and then yesterday we talked about as price was declining. I mean, obviously it was nowhere close at the time, but remember yesterday we said, okay, I'm a buyer down into this lower 41.03 level, right? Ironically, it touched it to the tick. It was amazing. So I'm sitting there watching it yesterday, kind of mind blown, you know, because I will tell you on the larger time frame zones, it does happen. Okay, well, we know it does because it's right there, but it's not something that I talk about too often, just because it's not that common. So, you know, again, it does happen. If you look over here, it's the level of accuracy from the zones, of course, and not trying to toot a horn there. I just mean this is any supply, you know, supply demand. It depends on how accurate you can get it. But this is not what our goal is. We're never really trying to get it that accurate. We get lucky with it sometimes, and it does, or rather it is that accurate. But again, it is irrelevant. It doesn't matter. In fact, I would almost rather it come into the zone, you know, just a little bit. It gives me a little bit of freedom on getting filled and so on. But you have that one there. And then yesterday, I'm just sitting there watching it, and sure enough, you know, it comes down and tags it, you know, kind of lucky there to the tick. And then price, of course, rallies, you know, back up. As we discussed yesterday, we're looking for a higher entry. I believe we specifically discussed, what was it, 40, it was right around the 4,200, maybe just above that or something. But it doesn't matter. We've not made it there yet. So this trade that we discussed yesterday, which is not the one that you see here. This is the same one from the other day. As you remember, I told you I didn't close it out because we didn't hit that 73 during the session. So I just left that entry on, thinking, hey, when we get back into the room, maybe price will go back up to the 41.73, and I'll exit that position. So what I've done, and this actually works out really good for today's session because I can show you the different management situations here. So for all intensive purposes, that trade, this one here has already reached its target, but as I said, I didn't close it. It doesn't really matter because I would have re-entered there. That was a re-entry from yesterday anyway, so this trade kind of makes a lot of sense. But if you notice, I just wanted to specify that because if you notice, there would have been no way to get the fill that I got because as you can see here, we didn't make it that low yesterday, right? So this trade right here was actually filled prior to that. Okay, Anyway, moving on. What I have done, though, is I've come up and I opted for, again, let me show you in the secondary menu so you can see what I did. I turned the OCO off. Well, why would I do that? Well, I don't want an OCO, right? Because if I go down here and I try to close out this position with an OCO attached to it, what would then happen is I would have two naked orders out in the market, right? So let's say I did have an OCO attached to this, and all I'm trying to do is close out 10 contracts, okay? So I want to close out, so these are long, obviously. I say obvious because it's in profit and the current price is trading above the entry. So I don't mean to say, anyway, it should be fairly obvious. So in order to close out the long position, I, of course, need to exit with a short position, right? Well, you can see here that I have 10 contracts versus 10 contracts. That's basically going to flatten, just going to flatten the trade. Well, if I had the OCO attached to this, it would flatten the trade, but I would, wherever it is, I'm just going to use, so basic numbers up here, but let's say that the stop was up here and maybe the target was down there. Well, this would effectively close out the long position, but then I would have a stop order up here and I would have a limit order down here, and those would both, either or, would open a new position. So I don't want to do that, right? And that's why we have all of this built in as we do. So I can do this directly from the menu. I can toggle this on or off just that quick. So what I did was I went into this menu, I went down, toggled the OCO off, clicked sell entry, my label is placed on the chart, I adjusted it accordingly, I submitted it, it's a done deal. So this now is acting as a stop at break-even plus commissions order. If I wanted to, let's go back, all right, let's say back here, where if you remember, based on what we discussed in the room, I was looking for 4173. So first things first, I don't want to make the cardinal mistake of moving this order until I cancel it. If I move this label up and it touches current price, I just closed out my order, okay? So I'm going to cancel that first, and then I can move it up here for illustration purposes. So I had it at 4173, and now I submit it. The order is intuitively changing on the back end, right? So it's saying, well, hold on a minute. We're above current price now. So instead of being, a stop order, I'm going to alter this to be a limit order. Okay. So again, it just intuitively knows, if I'm above current price and I'm attempting to sell, I am either going to be a limit or a market if touched order, and we specify that in the settings. I personally, on the S&P futures contract, notice I canceled that again, by the way, okay, before moving it. That's very important, because if I wouldn't have done that and I moved it down, boop, it would have closed out my order instantly when I touched price, because this is a trigger line value. So I'm going to move that back down, okay, and I'm going to resubmit it. Again, it just changed in the back end, because now the order label in and of itself is below current price. Okay, so that's it's a big distinction to make there, because it alters the type of order that this is actually going to be submitting. All right. Right now, it's saying I want to sell the market, but do it at a lower price value. So the only way to do that is to effectively submit a stop order of sorts down there, right? Now, what type of stop order? It could be it could be a stop market or a stop limit. I can make that alteration in my settings, but I personally, I'm using market if touched orders. I talked about this with you all, many times. I don't advocate for anything, right? I'm happy to share with you what I do, but I look at it this way, folks. This is quite straightforward. You're talking about the most heavily traded, the liquid market. I'm not actually speaking fact here, but it's most likely the heaviest traded market in the world. One of them for sure, right? So for me to go out and concern myself with a tick or two, it's just not going to happen, okay? So I prefer, again, this is not me advocating for this. You need to do whatever you feel is What makes you feel comfortable? And it can be opted in the settings. We can literally go in here. I'll show you very quickly. All right, here in the order inputs, I can specify that right here. Do I want it to be limit? Do I want it to be market if touched? Right, and so on and so forth. So I specify that all in the settings. So that's at my preference. And again, I'm just sharing with you my preference is on the, and this is with specificity, on the S&P 500 futures market. I use market orders, okay? Used to, I would never have done that. And this is back when I didn't know any better, right? I thought that, you know, limit order was the only way to do it just because I like knowing that I'm going to get said price or better. And I still like that in theory. But what I don't like, and over the years, here's an issue with it. Let me explain this. That right there, that's the issue, okay? So had I have not been using market orders, maybe, most likely even, I wouldn't have gotten filled because it did it pretty quick. So I would rather run the risk of, you know, slippage on a tick or two, which, by the way, I almost never get in the E-mini. Okay, so this over here, I'm short the micro E-mini. Okay, over here, I'm long the E-mini. So that they're both the S&P 500, as you most likely know, but the ES is the S&P E-mini futures contract. This over here is the MES, which is the micro E-mini. It's a tenth, so divisible by 10 of this. All right, but anyway, on the S&P, the E-mini, the ES, if you will. Sorry to be redundant. I'm just trying to give you every single thing I can to be explanatory. So with that, I almost never experienced much slippage at all. Suffice to say, I'll usually get a tick. I may get a tick of slippage on a market order. So if I'm going up with a large amount of contracts, then I need to evaluate the worthiness of that. But look, even let's say going up 20, 30 contracts on the E-mini, it's not that much. And if you watch the bid and ask data, you'll see that pretty quick. You know, what is considered large, what isn't, and so on. So I would just encourage you to go watch that, and it will show you kind of what you can expect as far as your slippage. Now, obviously, here, you know, the obvious disclaimer there, using market orders, I would very much encourage you all to do your research on that, because if you don't know about market orders, and you, again, let me reiterate, I am absolutely not advocating for them. I'm just explaining what I do. But with a market order, it could go really nasty. So if I'm trading a, let's say, spot market, maybe the euro dollar, which is liquid, yeah. But if I'm trading maybe a non-liquid, by the way, over here we're now at break-even plus commissions, as you can see. So what happened is the stop, which was previously up here at 48 ticks, it has now moved to break-even plus commission, thus becoming a simulated, I say profitable, meaning, you know, in the sim account, but profitable trade there, right? Okay. So market orders, they can go very sideways. If I'm not in a very liquid market, especially the spot market, you're going to get slippage on that almost no matter what. So the spot market has a spread involved, and it's a very dangerous thing. Also in equities, even in futures markets, depending on the ones that we're trading. But that's why I earlier stated that I was discussing this with specificity. So in the E-mini contract, there's so much liquidity, just so much volume, and so on and so forth. I'm not worried about it. If I go out and I trade a different style market, then I might be worried about it, okay? So I may go up here and alter that to be, you know, limit orders. Okay, very good. So what I'm doing here is managing two types of trades, okay? We can see over here that we managed and/or entered. Actually, it was good because we did that during the room. But notice the difference. This one over here has that OCO attached to it, which is what we were referring to just moments ago. This one over here does not. I can scrunch that chart all the way up, and you don't see any other orders anywhere. That came from that simple toggle. Again, it looked like this. I can toggle it on or off, right? Another thing to note over here is how the function is going to occur. So let's say that we go back to where that entry took place. All right. So the entry took place here, stop was here. right? We can all agree to that. I think you saw it. Well, as price, let me backtrack. I'm sorry. That was on a down bar entry. So in other words, enter on the close of a down bar, etc. And even in the account there, you can see that there's one tick of slippage. That's kind of how that worked out too, right? So that's pretty realistic there. But that being said, if that would not have occurred and price would have started to go back up, this stop would have moved with it. Okay, and the reason that it's doing that is because you know, think about this. You take a sell position, and then your stop is below. Well, that doesn't make sense, does it? Right? So no, it would be an order rejection. Okay, we don't want that. So there's safety features in place that in the event, again, if the stop is here, which it was, and then price starts to move back up like this, what it's going to do is auto adjust. So the entry remains below the stop, in other words. What's important to note here is that occurs on the up-down bars as well as the RBRs and DVDs. To say that differently, it occurs on anything that auto adjusts. So, or fluctuates was the term I used earlier. So remember when I was saying, hey, you see the order, the entry there fluctuating. Well, that's because it was waiting for something to happen. So it's waiting for a condition. That condition in this particular case was a down bar close, right? So once I got that, the order's then filled and so on and so forth. So using those conditions, what if I don't have that? What if I only have, say, a manual entry to buy or sell? It doesn't really matter. I don't want to do it on this chart because I suppose I could. Yeah, I guess I can do that. So if I go over here and I use the secondary menu, I'm going to have to do this, right? I have to because I think for obvious purposes, I don't want to mess with this. It's probably about to hit that stop anyway, but that's okay. So I don't want to mess with that order, but I do want to illustrate this. So if I go over here, I'm just going to opt for a buy or sell entry. Now, number one, I need to ensure that the OCO is on if I want that bracket order there, okay? But this is what I wanted to bring your attention to, the entry zone. So let's say that I want to, I'm going to use, for me, just to rationalize things, I'm going to use this buy bullish dollar cost averaging type of mentality, if that's okay. Hopefully this will make sense. Now it could be the inverse too, but my personality is like, no, I want to remain bullish to the best of my ability, especially in the index market. So I'm just, that's what I'm going to do. So let's go down here and let's say that for all intensive purposes, I want to be the buyer down here at this 4085 level. Okay, so I want to be the buyer down there. I'm going to go, okay, great. I have my entry zone, not my entry, I'm sorry. I have my OCO already enabled, so that's great. So if I toggle this on, you can see there's my stop, so I can move that to wherever I want. My entry, which is going to display on current price, I can drag that down, and all is well, right? I actually have 2 contracts, so on and so forth. Great. So I believe these are specified to 2 and 4 to 1. So you have here 26 at risk, 52 at target number 1, 104 at target number 2. If we're doing the math, that of course does equate to a 2 to 1. So you have a trigger line at 1 to 1, target 1 at 2 to 1, target 2 at 4 to 1. Okay. Oh, there goes the open. Let's see how what price is going to do today. I was hoping that price would drop down. I did, talk about this yesterday, but it did go down yesterday, which is what I wanted it to do, again, specifically to that 4103 zone. But I'm also hoping that it goes down again today, okay, just to be clear about that. Not that it matters. I don't trade on hope. I'm just saying if it does go down, I'm going to be a willing buyer. Today we'll talk about that in a little bit here, okay? All right, so anyway, moving on a little bit. If I wanted to do it as such, so I got a long at 10 contracts here. So let's say that price goes down, okay? Well, obviously that's the only way that would get filled. But let's say that price, continues down or whatever the case may be. And I say, all right, well, I'm going to go do something like this, and I'm going to put my entry up here at 4,100, okay? But I want to have specificity, all right? And I'm willing to buy at this level, all right? So then I can go over here, and I can enable, I'm sorry, this was on my secondary. So what I need to do is toggle that back off and enable what we call the entry zone. Now I could put a manual order anywhere, like I just did. Let's leave the entry zone off for a second, and I can put this anywhere I want it, right? So I could do something like this. I can move the stop way down here, something like that, let's say. Because now I just have a manual, random, if you will, but rather a manual entry. If I go here and I toggle on the entry zone, I can specify exactly where I'm willing to take an entry. Now beyond that point, I can use what I call the adapt zone. That is, well, let me explain it as we go, okay? So I'm going to go here and I'm going to say, you know what, I want to take an RBR entry. Or an up bar. Let's just use the up and down bars since we've already seen one of those and we know what they are. It's pretty self-explanatory. But essentially on the close of an up bar, okay, I want to execute a position. Great. So I'm going to toggle that on now. Okay. So here we have an up bar entry with my the entry zone. Okay. So what the entry zone is doing, you'll notice that these are constantly fluctuating, and it's moving. You see the entry up here with current price. So right now, if I submitted this and we got that up bar, it's going to submit the entry. But what if I don't want that? Okay, so maybe I want to enter down here. As I said before, I'm looking for this 4085. Okay, so if I specify that and I say, no, I don't want to buy up here, I want to buy low, right? Buy low, sell high, and all that. So I can do that. I can say, nope, I want it to be at 40. In other words, anywhere inside of this rectangle that I'm defining right here. Okay? So I can match the zone with it, and then I can go, okay, great. Now I'm going to go up here and I'm going to submit this. And maybe this will happen, during the room or what have you, but I am not inside of my entry zone. And so what it's going to do is essentially disregard that order in its entirety. And the reason it's doing that is because I'm the one that said, no, this is where I want you to enter. And let's explain what the purpose in this is. Okay, so think about it this way. What if I wanted to have a confirmation entry? Okay, but I want that confirmation entry to happen in a specific location. So for all intents and purposes, I could have a larger time frame, because we use, I'm sure many of us do, use that multiple time frame analysis, right? So I could say, look, here's the 4-hour demand. I mean, this is not it, okay, but I'm just using an example here. I could say there's 4-hour demand way down here around the 4085, okay? And maybe that 4-hour level is, that large. Looks fairly accurate there. So let's say from 4075 to 4085. Notice, by the way, you see what just happened? See, we got the up bar, but the order is still pending. So it did not execute that position because we're not inside of my specified area. Okay, so on the 4-hour, I'm just using an example here. We say, okay, well, we have a larger time frame demand zone down here, and I really do want to be the buyer down there. However, I want to get there, and then I want to confirm my entry going up. The beauty in this is it can save us many, many, many times from bull and bear traps. So let's say that price declines as such, and it goes just below, right? So let's say that it hits 4070 and then produces that up bar. Okay? So is that inside of the entry zone? Well, no. However, there is, so would it take, if we just left it at that, would it take this entry? No, because it's not within my defined area. However, as you can see up here, you can see here where the adapt zone is on, okay? And what that means is if price goes down and or up, depending on if I'm buying or selling, of course. In this case, I'm looking to buy. So it's saying if price goes down into the entry zone and beyond it, in other words, lower than the low, do you want to trail and or adapt to the new low that is formed? Okay? So as I told you before, I'm going to use my mentality, which is somewhat of the, I like to be the buyer, and dollar cost averaging is a beautiful thing in my opinion. So what I'm looking to do is buy low, all right? So in my case, I've opted to say, yes, I do want you to adapt to a new low because I figure what's likely to happen here is we're going to get a bear trap. So it's going to come in, it's going to go down to my 4-hour level, but it's likely to maybe breach it just a little bit. So in this case, given my draw object there, pretend that that was actual price. What would actually happen is the low would continue to adapt, right? So it would be going down, 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 down like that. And the stop would be just below the structure because it would be continuously adapting to any new low that formed. Now, you're thinking, well, the zone is getting larger. True, right? So in addition to that, whatever I have specified in my maximum risk, which again is in the settings, so I could say I want it to be based on a dollar value, a currency if you will, or I want it to be based on the tick increment, tick or pip, etc. So I believe I have 100 in my settings. I could be wrong, but let's just pretend for a minute that I have some small value or something to that extent. So down here, okay, as this adapts to the new lows being formed on the way down, as is the high value of the entry zone as well. So think of it this way. Whatever my maximum risk tolerance is, it's never going to supersede it. Okay? So if let's pretend that the 100 ticks or whatever is that big. Okay? Every time price goes down, both the top and the bottom are going to travel with it, because the zone, the entry zone, is already at my maximum risk. So it will not do that. It will never be larger than my maximum risk. It will have to adapt down to my maximum risk or smaller. Okay? So that's how that would work. Again, if I found for whatever reason that right down here there was a 4-hour level, let's say, and I wanted to be the buyer, great. What I can do, is not that. Okay? What I can do is exactly what I've already done, and I go on about my way. Right? Everything is done. So I've specified this. I've said, here's the area I want to be the buyer in, and I want to confirm it with an up bar, but it must be in that area. So I've now completed my trade with the exception of my target and trigger line. So I could do this, and what I'm going to do is I'm just going to keep letting them fluctuate, because currently, as we previously discussed, excuse me, this is set to a 1-to-1, the trigger line, meaning if the trigger line is touched, move my stop to break even plus commission. So that's a trigger line for the stop to move. And then my target 1 as well as my target 2, those are set at currently a 2-to-1 for 5 or half the contracts, the remaining half at a 4-to-1. So whatever this risk ends up being at the time of actual execution, that's what the trigger line and or targets are going to equate to. 1-to-1, 2-to-1, 4-to-1. As you saw earlier, I can manipulate these if I don't want that specific calculation. So I can go ahead and move any one of those 3 right now, and they'll become fixed. You'll see those solid lines over here go to dashed lines. That means they're not going to auto-calculate anymore, and they're going to remain fixed and stay where you or I have put them. Okay. So again, I'm just going to let them fluctuate. But I want to make that clear, because here, this is what the functionality is doing. Everything we do is in an attempt to make our lives, trading specifically, a little bit more efficient. And that's especially to do with time and just general convenience, right? So I don't want to overthink things. What I want to do is have a very defined plan in place, and I want to stop being my own worst enemy. I don't know about you all, but that's what I am, right? So, I mean, I've been doing this for so long, and yet somehow, some way, there's always an emotion that creeps in, right? It just comes from left field. How do you even get in there? You know, been doing this for so long, you would think that I would never have an emotion, right? I mean, regarding trading. Thank goodness I have plenty of emotions. That one feeling I have, you know, it keeps, I'm just kidding. But anyway, so that's the idea, right? To make life a little bit easier when it comes to trading. Time, give me more of it. Convenience, a lot more. I need it, okay? So I know where I want to be the buyer, here or lower. I know what my maximum risk is. I've already specified that. I put it in the settings, okay? So it's 100 ticks or it's 10 ticks or it's 27, I don't know, whatever it is. But don't go beyond that, okay? Got it? So go down here, and not only do I want you to go down there, I want you to then confirm that entry or just keep going down because clearly there's going to be a bear trap here. So now I have more time, so I can get up and leave, in other words, or do something else if I have some business stuff to do, or call a friend, what have you. Call them for emotional support, right? I'm going to call my friend and say, "Whoo, I'm struggling. Can you help me?" But so you got time, you got convenience, which in and of itself is, time and convenience is two in the same, but the convenience covers a lot more, doesn't it? So in addition to the time convenience factor, I have other things that I can now conveniently do, again, such as to say do other things, and or just not stare at the chart and feel confident that my plan is already there. Okay? So all that good fun stuff. I like the ability, so if this was, for example, a real case scenario, okay? In other words, if there really was a 4-hour demand zone that I was looking to buy, okay, now my job is done. And what did I do it in a matter of, what would you say, probably 10, 15 seconds maybe? Right? Very efficient. So that's the purpose in that. All right, so we had, let's go do a little bit of analysis. Let's look here. Remember what we previously stated. I need to make this abundantly clear. Why was I willing to be the buyer multiple times in the past 2 weeks? Well, as we stated, now obviously, we were moving higher and so on, so we wanted to be the buyer, but as we then started to decline, remember what we said, remember where our target was. 41.78, I believe it was 3/4, is that correct? Everyone, you can help me out with that. It was 78, it was 78 something. 41.78, I'm pretty sure it was 41.78 3/4. But anyway, how did we know to do that? Very simple. Okay, so if you recall, we talked about getting just above said high, which was right over here around the 41.78 area. Sure enough, we went up, tagged our 4-hour supply, started to decline away. So we hit that 41.78, again, I believe it was 3/4 target, and we started to drop away. But what were we saying? So hold on, I want to exit my long, but do I want to sell? I'm just going to rinse and repeat what we said back then. I'm going to say it again. I wanted to be the buyer. I wanted to exit where the sellers are, but I wasn't interested in actually selling the market. Because at that time, as well as today, we didn't and don't feel that the sellers were as predominant as the buyers. Just like yesterday, for example. Remember, we were really showing some severe weakness and but yet we're sitting there saying the opposite. We're saying, no, hold on a minute. I want to be the buyer, not the seller. I want price to drop, but I wanted it to drop to a very specific level, right? And that's to this area right there. That's to the, so let me turn off the bigger picture zones real quick. I'll just turn these off. There we go. So that's that 4-hour demand right there, right? That's the one from yesterday. So we wanted to be the buyer, but we didn't want to be the buyer up there, right? No, we wanted price to come back and buy low. That's what it did. It was great. And then, again, hitting that zone there to the tick. So what about today? Why did we even say that? How in the world is it possible that I was willing to buy the market when clearly it was showing weakness? Well, when I go to Best Buy and I look to buy the TV, I'm looking for clear and substantial weakness. I want the sale price. I don't want to buy it high. I want to buy it low. It's just ingrained into, I'm going to go out on a limb here and say every single one of us, right? Maybe not, but I'm pretty sure that's how we do it. We would typically go out and try to find a good sale price on it. So same thing I did yesterday, and to go a step further, I'm going to repeat what I've already said. Remember, we don't look for a VTC that looks like this. As covered in the course, this is not the type of VTC that we would look for. In fact, I would expect, and or rather anticipate, that that high is going to get broken, okay? It doesn't mean that it's going to go straight up and break it right this very moment. However, overall, okay, go back to last week before any of this had happened, right? And what did we talk about? Well, given the fact that we're retesting it like this, we're not going to look at this as a VTC. Most likely, or rather the most likely outcome would be what? One of two things. What were those patterns that we talked about last week? The bull, what was it? Were those two patterns? We said, well, it's most likely going to form one of the two, patterns. What were they called? Bull what? Very common patterns. This area right here. It's not rhetorical, folks. Help me out. What did we talk about? There you go. Thanks so much, sir. Ah, yeah, there they go. Now they're coming in. That's right. Exactly. The bull flag or a pennant. Okay? So that's what we've seen. We penetrated just above it. In other words, this high right here penetrated just above what was looking to be a pristine attempt at a bull flag. So I'm still going to draw it as such. We can adapt to that high if you want to, but I'm going to leave it as it is for right now for illustration purposes. Okay? And what do you see happening here? Right? So let me go like this. Oh, you got to love that path tool. So there is your, let's just leave it like that. Yeah, there we go. Okay, so there is your attempt at a bull flag. Whether that actually, completes itself, and really does come to fruition or not remains to be seen. Because in order for this to conclude itself, it would need to take out this high, right? At said time, we can then go, yep, we can confirm that indeed was a bull flag, right? Or again, it could be, could end up forming like a pennant of sorts. Yeah, sure, but it's already looking a lot like a flag. Now, here's what's what about this, right? Like how I did that there. Here's what's what. All right, so I'm going to extend that like this. And here's the thing about a bull or a bear flag. There is no definitive amount of retests. And this, quite frankly, it's not even that big of one. So for all intensive purposes, we could still be looking at something like this. Try not to have too many draw objects here, but we could be looking at something like this. Right? Would that or would that not make sense? I mean, it makes perfectly good sense to me. And then confirm it to break out of it. All right? So we're not, by no means are we saying that this, is about to break out right now. In fact, I would prefer that it does not. As I told you a moment ago, I really am wanting, I would like for price to go lower. And the reason that I would like for price to go lower is because, quite frankly, I want to buy I want to buy low, right? I mean, I'm just trying to tell you how it is. I want to get a sale price. That's not being greedy. That's having a definitive rule-based plan in place that checks me every single time and says, are you doing what you're supposed to do or are you not? And let me tell you, I'm just open book, kind of transparent when it comes to stuff like this or whatever, but it's not easy, right? So I do have to constantly check myself, even today. After doing this what seems like forever, I still have to check myself. It is so very hard, folks, and I do get disappointed is probably the best word that I can use as to what my emotion is from time to time. I get disappointed when I don't get my entry. How would I not, Because if I don't get my entry, that means I'm not in the market. Well, I can't make or lose anything if I'm not in the market. So my level of disappointment typically comes into play when I don't, go down and get that fill. What then happens is I may end up getting a better fill, right? So, but that's not going to make today any easier. So today I may feel severe disappointment. That same exact trade that I was looking for, may be disregarded, and I may look for a better one next week. So am I going to then feel disappointed, or I may feel ecstatic, right? Because I got an even better entry. But as I said, that doesn't make today any easier. So for today up to next week until I do get my order filled and or executed, I'm going to feel that severe disappointment. It's going to be just daunting. But when I get it, it's very nice. Okay? And I got it knowing that no matter what, I followed through with what I was going to do. That takes so much. Several words are coming to my mind. Stability, fortitude, right? Consistency, confidence, so on and so forth. And I'm saying those all in a positive sense. Don't take that out of context, right? That doesn't mean that that I have all of those with ease. For sure, I have probably many more faults than otherwise. But it makes me feel good knowing that I did follow through with my plan, okay? If I go up here right now and I see price rallying, because that absolutely happens. In fact, it happens somewhat frequently. So I go up, especially if I'm on the smaller time frame. Let's go over here and look, because it's going to make you feel a little bit more emotional. See, look over here, bunch of green bars, right? So now I'm like, oh my goodness, I'm just not going to get it. I'm going to miss it. Having all these negative emotions already, you see. So I go and I make this subjective decision to just, you know what, that's all right. That's all right. I see prices going higher. I think it's going to just go on and go higher from here. So I submit an entry to go long. Over the course of this day and maybe the following or whatever, what happens? The universe has a way of smacking myself right in the face and says, see, you should have just been patient, because then it will go right to where I anticipated from the beginning. But now I opened up my risk exponentially, right? So now I'm in big trouble, and it's not going to do me any good. In fact, it's going to hurt me over time. So I always try to have that rule, rule set in place and actually adhere to it. So, okay, very good. So that's what I'm looking for overall. But I would like for price to go down before going up, okay? Same as I said yesterday, I want price to go down before going up. So right here I could take a short position. I should have probably done that previously. I apologize. Let's go do this. No, never mind. I'm sorry. That's okay. That's all right. So what I was going to do is try to catch that short entry real quick, but there's no way. Even in the room for illustration purposes and simulated account or whatever, I still don't want to do that. If I do it here, multiple things are occurring. For one, I feel that I'm putting kind of bad, it's not the right word, but we call it like juju or something like that, I think is what they call it. Bad vibes, let's say. I'm putting bad vibes out there because there may be a single person in the room today or whatnot thinking that that's okay. That's something that we might normally do, and it isn't, right? So I would never chase a trade. In fact, it would be done right now because it just right there. Let me show you. If I looked on a smaller time frame, right there is where your order flow was going to be, okay? Unexecuted, of course. And we know that because it went up, it came back down and got rejected from right there and then went straight back up to here. So that tiny little area right there is where the buyers are, and you can see where they're turning from right now, okay? If I looked on a minute chart or something, it'd be easy to see as well, probably even easier. But suffice to say, we have fairly an open path to the downside. Ironic how we're right down at that same level again, 41.0375, okay? So I'm hoping that price will decline. In fact, it would be ideal if we would go even lower, okay? Maybe go down there and try to grab that 40.31 half level as well, okay? So I'm interested. I'm looking lower. Think about that pattern that I just talked about just moments ago. So remember I drew this flag in. It looked a little something like this. Okay? Does that make sense? All right? Think about that. So look at this right here. You see how that support is lining up right at the demand zone below? So it could dip down to 40.31 3/4, have a very nice demand side there, and then rally right back up. And ironically, we could remain inside of that very same bull flag pattern that we've been talking about for 2 weeks. I think it's been 2 weeks, right? Maybe even over 2 weeks now. Because I recall that we were talking about it, right up and through this area here before. Anyway, however long ago it was, it doesn't matter. Okay, so scalp traders. Again, I apologize. I didn't get to this fast enough as we were talking about many things. So what would I be doing right now? Well, number one, what's my larger time frame telling me? To sell, right? Yeah, absolutely. So what I would, apologies folks, what I would be doing, or rather would have been doing, it would have been concluded as we speak, kind of like the first one you saw this morning, which it was this one, right? I was trying to remember which one it was. Was it that one? Because there's been two this morning, just so you know, but this one I had already concluded before you all got here. This is the one that you saw, if memory serves me correctly. Yeah, so there was that one there. It went down, hit the break-even plus commissions, right? So then there's just another entry right here. Remember the requirement that we had of those minimal 3 bars, right? Not so much minimum of the 3 bars. So we got that. Price is now declining again, so that would have been the short entry there. And overall, so trigger line here, and then the target, I'd be looking for this level again, okay? So 41.03 3/4, and I would get just above that with a target. So it'd be, let's call it 41.05, right? So over here, right, on this chart, I would basically be short from here, looking for price to go down to 41.05, all right? And perhaps it does, or perhaps it doesn't, because the break-even point looks like it went beyond it a couple ticks. Well, sorry, I can't get my line perfectly straight there, but okay. So that would be the trade in and of its entirety. All right. Okay. Let me see. Yeah, thanks for all those comments that were coming in earlier. When you look over here, by the way, this is great for me. Again, it pertains to the emotions and the stability and just, I don't know, trying to create a lack thereof, right? So in this case, when I look up to the bigger picture with the smaller time frame zones on it, it's most advantageous because this right here, just looking at this chart, makes me feel better internally, right? So yeah, I can now look at that and be like, okay, well, if it drops down at minimum here, or let's say we drop down to our lower level, that's not a big deal, right? I mean, it doesn't look like a big deal at all. In fact, if I go in here and I draw in the major support, shouldn't it go down? Look at where it's finding that support. See those two demand zones we previously talked about, right? Yeah, that makes a lot of sense. In fact, if I go up in time frame, I don't want to load too many days, so I'm just going to go, because if I load a weekly chart, it loads like nearly 2,000. So I'll just go with 500. That's fine. Okay. But the point that I'm making here is if I go up to a weekly chart, look at how clear that is now. It's so very clear that we could absolutely pull back and not even remotely come close to changing the overall direction of the market. Okay, so I'm going from very big time frame down to intraday, but suffice to say, I'm still going to remain bullish in this market. But that doesn't mean, with the bullish sentiment, doesn't mean I want to go buy the market right now. I absolutely do not want to go buy the market right now. I want it to pull back down and give me a better price, but overall I do still want to be a bull and or buyer in the market. Okay, folks? All right, so go ahead if you have any questions right now, please. Let's go ahead and get those out of the way. I have an appointment actually that I have to step away for here in just a moment. So, all right, let's see. Natural gas, yeah, I'll do that real quick. Let's do that. Here we go. Wow. Ooh, thank you for this, my good friend. I have not looked at this in quite a while. In fact, you can see the draw object I left on the chart. Oh my goodness. What a picture perfectly. Okay. Yikes. Man, thank you so much for bringing this back to my attention. The last thing that we discussed on natural gas was to short the market. Remember right in through here we were saying if this DVD occurs, right, we're talking about shorting the market. So there's the DVD. I mean, obviously we see the outcome now, but wow. Yeah, natural gas has just really taken a tumble. Very good, very good. In fact, if we go back a little bit further, we remember that we were talking about selling the market up here on that DVD at the RVM and so on and so forth. I guess we were just looking for a re-entry here. So we've traveled down so far. Just give me a moment here, please. I'm going to need a moment. Sounds like a temper tantrum, does it? I just need a moment. No, I want to overanalyze. I don't want to overanalyze, but I need to get some awareness here because this is it's kind of a big thing here. So it's taking a moment to load the data because I haven't loaded this market in so long, so it's trying to cache it on the local machine as we speak. By the way, while I'm doing that, okay, here you go. All right, so let's go over here. What I'm going to do is I'm going to cancel that. Okay, so we're just going to turn this into a down bar. Hold on a moment. Wait a minute. Did I have that? Hold on a minute. Let me see. Did I have that submitted? No. Okay, good. We're good then. So what I'm going to do is go turn this off and go turn this on. Okay. Sorry. I'm just taking time. But anyway, it's kind of a rinse and repeat there. All right, let me go back to natural gas. Did the monthly load? No. My goodness. It's taking forever. Just so you all understand, like I told you, the data here, so the software, watch how fast it loads. Just like that. You see what just happened? But what was happening, the data, and you've experienced this before, I know, especially on the monthly time frames, until the data loads, what is it? Asynchronously, basically, is kind of how this is functioning. In other words, the data has to load first, and then the software attempts to load simultaneously as it's populating. Okay. Anyway, folks, thank you so much, Benny, for this. Yeah. Okay. So I'm gonna absolutely get bullish here on natural gas again. If you remember the last time I was bullish on natural gas, you all remember this. It was years ago. It was right here, right? And I did that very specifically because remember what I said way back. And I know this is for those of you who have been with me for a long time. Remember what I said. I said I want price to make a lower low on natural gas, okay? And then I'm looking to be the buyer and so on and so forth. So it did that, and then we had beautiful buy setups on natural gas. But here's the thing. We're back down there, okay? And what I see right now is a substantially qualified and quantified demand zone. In fact, we're in it right now. So think about this. Entry zone, we talked about it earlier. Bull and bear traps, remember? Okay? So I want to use this area, but if I wanted to enter here, I could have gone and done something like this, right? I could have let's say an up bar or an RBR for all intents and purposes. So I could go here, let's say that I wanted to be the buyer. Well, let's do it like this. Let's just copy this level right there, okay? So then I could go down, which is precisely what I would do. Let's go down to the daily chart. All right. Now here's what I'm going to do. I'm going to say I want to buy the market. All right. So for all intents and purposes, I want to buy it on an RBR. I forgot to turn on my entry zone. I want to buy it on an RBR entry inside of the entry zone, but I also want it to adapt. So give me an RBR, okay, and then let me show you where I want to be the buyer. All right. So. Okay, so in this area, you see what just happened? Remember what I was telling you before? It adapts because it's outside of my maximum risk tolerance. Now, the natural gas has a further decimal. So 100 ticks, I need to open up my risk a little bit. If I really want to trade the daily time frame, I would, of course, need to open this up. Okay, so let's go over here. I'm going to go into my settings. I'm going to say, you know what, let's open up that risk a bit. I'm using my primary orders here. So I'm going to give it 1,000 ticks. I don't care what it is. I just need to open it up, right? Okay. So now I'm going to go back here, leave my entry zone and adapt zone. I want an RBR entry, and I want it to occur in this area right. Oh, sorry, not mine. I want it to occur right here. Now, watch. Let's see, there we go. Okay, so right there, did you see what just happened? You had to pay close attention to it. But did you see how price auto-adapted? And this is not a very fast-moving market, so watch. I'll show you again. Okay, so just watch. Give it a second. There you go. All right, so when price moves, it'll update, etc. So what it's doing is it's saying, hey, you stop. You keep moving me up here, but stop doing that. You're the one that told me, I'm just joking around here with the software talking to me, but it says you're the one that told me to adapt to the new lows because you might get a bear trap. Excellent. So as long as we're forming an RBR inside of this area, okay, I'm now bullish on natural gas. I can submit my order, and then again I can walk away, right? So in such a case, I may want to go ahead and adapt some things, right? So for all intents and purposes, I want to get before this area, and then my target destination, quite frankly, long way up. Okay, I most likely, okay, I can't, I don't ever try to predict things, but I will say most likely it's going to take more than one attempt here. And I say that because the accumulation of order flow down here on these lows, okay, we've had multiple, oh, sorry, the order got filled over here. I must have muted, hit the mute button. Anyway. So we'll come back to that in just a moment. Actually, let me do that real quick. Okay. Just trying to get 4110. And then remember what I earlier said, I think it was 4105. Yeah, something like that. All right, but going back over here, what I was discussing here is just the way that this bottom has formed. So I would be a little bit surprised if we do break out of the highs here on this RBR. What I would like to see on natural gas, I'm going to go ahead and put this out there right now. What I would like to see is a lower low. Now, I will take this RBR. Let's just put that out there. But secondarily, and or more preferred, I would like for price to make a lower low. And the reason that I would like that is because if I go in and analyze this, I mean, look at it. It's like a vertical decline here. Okay, I barely have anywhere that I can even draw a trend line to. So what I would prefer is that we form one more structure of sorts to draw to, and then we rinse and repeat this pattern right here. Okay, so we'll see, how that pans out. But I'm going to go ahead and put these draw tools here, just like I always do, and like the ones you saw just a moment ago, so that I remember this. Okay. So I'm going to put it like this. Actually, you know what? Let's do this. Okay, so I'm going to do it like that, and or I'm going to do another one. I'm looking over here at approximately 2. Kind of make those look halfway decent. Okay, there we go. So those are the 2 scenarios that that I'm looking for. Okay, cool. Thank you again for bringing that to my attention. Great market here. Treated us very well a couple years ago, right? That was nice. But anyway, okay, folks, I'm going to end on the note. Got an appointment, all that good fun stuff. If you have any questions, however, whatever you need, just let us know. God bless you, and we'll see you in the next one. Bye for now.